We are covering these 6 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you our review on MGRM. Monogram Technologies Inc, an AI-driven robotics company focused on improving orthopedic surgery. They combine 3D printing, machine vision, AI, and robotics to create patient-optimized implants at scale. Their flagship product, the MBOSS Precision Robotic Surgical System, autonomously executes high-precision implant insertions. They're also developing robotic surgical equipment, implants, and navigation tools, with plans to expand into other clinical applications. Now, here's the big news. Monogram just received FDA 510(k) clearance for their MBOSS TK system, designed for robotic-assisted total knee arthroplasty. This system uses patient-specific imaging and predictive navigation tools to deliver personalized, precise knee replacements. CEO Ben Sexton called it a game changer, highlighting its potential to advance robotics in orthopedic medicine. With this clearance, Monogram can now market the system in the U.S., a huge step forward. They're strategically placing the system with key surgeons in targeted regions to build real-world clinical experience. They're also upgrading the system and refining next-gen tech to stay competitive and expand into new applications. Internationally, they're working on regulatory clearance to start clinical trials in India with their partner, Shalby Limited, a major hospital chain. This could open up significant growth opportunities. Financially, they're in a solid position with $15.7 million in cash as of December 2024, focusing resources on commercialization and future advancements. For investors, this is a high-potential play in the growing orthopedic robotics market. The FDA clearance validates their tech, and their focus on personalized, robotic-assisted surgery aligns with healthcare trends. That said, there are risks, regulatory hurdles, competition, and scaling challenges. But if Monogram executes well, they could become a major player. Keep an eye on this one. Their recent FDA approval is just the start. Our review on ARQQ, Arqit Quantum Inc, a UK-based company that's making waves in the world of encryption software. They're all about securing communications for any network device, cloud machine, or data at rest, protecting against both current and future forms of cyber attacks. Yes, even those from quantum computers. Their suite of products includes the Arqit SK platform, which is available as a platform, a service, or a private instance. The Arqit Network Secure Adapter, a lightweight software app that hardens VPN communications against traditional and quantum attacks, and Trade Secure, which generates and distributes digital trade finance instruments to protect supply chains from disruption and fraud while improving cash flow. In short, Arqit is at the forefront of quantum-safe encryption, and that's a space that's only going to get more critical as quantum computing evolves. Now, let's talk about what's been happening recently that's got investors buzzing. Arqit stock has been on the rise, leading the charge among quantum computing stocks ahead of NVIDIA's highly anticipated GTC event. For those who don't know, NVIDIA's GTC event is a big deal in the tech world, often showcasing breakthroughs in AI, quantum computing, and other cutting-edge technologies. The fact that Arqit stock is moving ahead of this event suggests that investors are betting on the growing importance of quantum-safe encryption as quantum computing becomes more of a reality. Why does this matter? Well, quantum computers, once fully realized, could break traditional encryption methods in seconds, putting everything from financial transactions to national security at risk. Arqit's technology is designed to stay ahead of that curve, offering encryption solutions that are secure against both current and future quantum threats. This positions them as a key player in a market that's expected to grow exponentially as quantum computing advances. For investors, this is a company to watch. The recent stock movement ahead of NVIDIA's GTC event highlights the market's growing interest in quantum-safe encryption and Arqit's potential to lead in this space. That said, quantum computing is still in its early stages, and the market for quantum-safe encryption is nascent. There are risks here: competition, technological hurdles, and the pace of quantum computing development itself. But if Arqit can continue to innovate and capture market share, they could be a major player in the quantum encryption space. So, if you're looking at the intersection of cybersecurity and quantum computing, Arqit Quantum is definitely one to keep on your radar. Their recent stock performance is a sign that the market sees potential here, and as quantum computing evolves, that potential could grow even more. Our review on VTVT Therapeutics Inc, a clinical-stage biopharmaceutical company developing oral treatments for metabolic and inflammatory diseases. The big news? The FDA has lifted the clinical hold on VTV's catasegliatin program, which includes the CAT-1 Phase 3 trial for type 1 diabetes. This is a major win. Catasegliatin, an oral liver-selective glucokinase activator, has been well tolerated in over 500 subjects. The hold, imposed in July 2024, was due to a chromatographic signal in a human ADME study. After completing a required in vitro study, VTV has cleared the hurdle. With the hold lifted, VTV plans to shorten the CAT-1 trial from 12 to 6 months, speeding up top-line data and paving the way for larger pivotal studies needed for a future new drug application, NDA. The primary endpoint, assessing hypoglycemia rates at 6 months, remains unchanged. CEO Paul Sekhri highlighted catasegliatin's potential as the first oral adjunctive therapy to insulin for type 1 diabetes, offering a more convenient treatment option. For investors, this is significant. The FDA's decision removes a major roadblock, putting VTV back on track. Catasegliatin's potential in the large diabetes market is a huge opportunity, though clinical trials carry inherent risks. If the shortened CAT-1 trial delivers positive results, it could be a major catalyst for the stock. In short, VTV Therapeutics is one to watch. The FDA's decision is a positive step, and their focus on innovative oral treatments for metabolic and inflammatory diseases makes them a compelling story. Keep an eye on the CAT-1 trial. This could be a game changer. Our review on SES AI Corporation, a battery manufacturing company that's really pushing the envelope in the world of rechargeable battery technology. They're focused on developing high-performance, AI-enhanced lithium metal Li-metal and lithium-ion Li-ion batteries for a wide range of applications, including electric vehicles, EVs, urban air mobility, UAM, drones, robotics, and battery energy storage systems, BESS. What sets SES apart is their use of artificial intelligence across the entire spectrum of their business, from R&D and material sourcing to cell design, manufacturing, and even battery health and safety monitoring. Their goal? To combine the high energy density of Li-metal batteries with the manufacturability of conventional Li-ion batteries, creating a next-generation power source that's both powerful and practical. They're already producing large 50 Ah and 100 Ah B-sample Li-metal battery cells for EVs and their AI programs. AI for science, AI for manufacturing, and AI for safety are designed to optimize every step of the process. Their AI for safety, in particular, is a game changer for improving battery health and safety in BESS applications. Now, let's talk about what's been happening recently that could impact SES AI's stock performance. The EV and battery markets are booming, and SES is positioning itself as a key player in the next wave of battery innovation. Their focus on the metal technology is particularly exciting because it offers significantly higher energy density compared to traditional Li-ion batteries, which could translate to longer ranges for EVs and more efficient energy storage solutions. The fact that they're already producing B-sample cells for EVs is a big deal. It shows they're moving beyond the lab and into real-world applications. But it's not just about the technology, it's about how they're using AI to optimize every aspect of their business. Their AI for Science program accelerates R&D, helping them discover new materials and designs faster. AI for manufacturing ensures their production processes are as efficient and scalable as possible. And AI for safety is all about monitoring and improving battery health, which is critical for applications like BESS, where safety and reliability are paramount. This holistic approach gives SES a competitive edge in a market that's becoming increasingly crowded. For investors, SES AI is a company to watch. The EV and battery storage markets are growing rapidly, and SES's focus on next-gen metal technology and AI-driven optimization positions them well to capture a significant share of that growth. That said, there are risks. Battery technology is highly competitive, and scaling production while maintaining quality and safety is no small feat, but if SES can execute on their vision, they could become a major player in the battery space. Their recent progress with B-sample cells and their innovative use of AI are strong indicators that they're on the right track. So, if you're looking at the EV and battery markets, SES AI is definitely one to keep an eye on. Their combination of cutting-edge technology and AI-driven efficiency makes them a compelling story in the energy storage space. Our review on RGC, Regencell Bioscience Holdings Ltd, a bioscience company that's bringing a fresh perspective to the treatment of neurocognitive disorders like ADHD, attention deficit and hyperactivity disorder, and ASD, autism spectrum disorder. What makes Regencell unique is their focus on traditional Chinese medicine, TCM. They're not just sticking to conventional Western approaches. They're leveraging centuries-old TCM practices and combining them with modern science to develop innovative treatments. Right now, they've got 3 liquid-based, standardized TCM formula candidates in the pipeline, tailored for mild, moderate, and severe cases of ADHD and ASD. This is a big deal because these conditions affect millions of people worldwide, and current treatment options often come with significant side effects or limited effectiveness. Regencell is aiming to fill the gap with natural, TCM-based solutions. Now, let's talk about what's been happening recently that could impact Regencell's stock performance. The company is still in the early stages, but their focus on TCM for neurocognitive disorders is gaining attention. The global market for ADHD and ASD treatments is massive, and there's a growing demand for alternative therapies that are effective yet gentle on the body. Regencell's approach, using standardized TCM formulas, could resonate with patients and caregivers looking for holistic options. Their 3 formula candidates are designed to address different severity levels, which shows they're thinking strategically about how to meet diverse patient needs. For investors, this is a high-potential but high-risk play. The ADHD and ASD markets are underserved when it comes to natural, side-effect-free treatments, and Regencell's TCM-based approach could carve out a niche. However, the company is still in the research and development phase, so there's a lot of uncertainty. Clinical trials, regulatory approvals, and market adoption are all hurdles they'll need to clear. That said, if Regencell can deliver on their promises and bring their TCM formulas to market, they could tap into a growing demand for alternative therapies. So, if you're looking at the biotech or alternative medicine space, Regencell Bioscience is one to keep an eye on. Their focus on TCM for neurocognitive disorders is innovative, and the potential market is huge. But as with any early-stage company, there are risks involved. Keep an eye on their progress with clinical trials and regulatory milestones. Those will be key indicators of whether they can turn their vision into reality. If they succeed, this could be a game changer for patients and investors alike. Our review on CRVO. CervoMed Inc. is all about tackling neurodegenerative diseases with its lead drug, neflamapimod. Their latest earnings were a bit of a mixed bag, posting a $2.02 loss per share, which was wider than expected, but revenue came in slightly ahead at $9.738 million. The company has $38.9 million in cash, which gives it some breathing room, but it'll need more funding down the road to keep pushing its clinical trials forward. Short interest has dipped 6.37%, but at 16.91% afloat, there's still plenty of skepticism in the market. Some traders are stepping back from their bearish bets, but overall sentiment remains cautious. With cash burn always a factor, investors should keep an eye on any fundraising moves, whether through stock offerings or potential partnerships. The big moment on the horizon? The Phase 2b RE-WIN-DLB trial, which is testing neflamapimod's ability to treat dementia with Lewy bodies. If the results are strong, it could be a game changer for the stock, attracting more investors and potentially moving the drug toward regulatory discussions. But if the data disappoints, it could mean more pressure on the stock and even tougher funding challenges. CervoMed is also eyeing neflamapimod's potential in stroke recovery, which could be a big long-term opportunity. But right now, the main focus is on the ongoing trial. Bottom line, this is a high-risk, high-reward biotech play. If the trial results come through, there's serious upside potential. But the company is still in the early stages, dependent on external funding, and facing market volatility. Investors should watch for trial updates, strategic funding moves, and shifts in short interest to gauge how sentiment is evolving. If all goes well, CervoMed could be on the path to a much bigger future. Please subscribe, give the video a like, and watch more from our playlist. Thanks!